everyone, so it's June 5th and we're taking a look at the last time frame where we were yesterday at the 45-minute chart. So we have a situation where price was just hovering between some of the highs. It bumped up against some levels which rejected price, and now we're headed towards 24 and possibly even lower. We're going to compare the daily, the 4-hour, and the 1-hour chart. On the daily, we have some indications of an uptrend under pressure. So it's days like these that we look forward to. And there's a few reasons. First, we're giving thanks for the gains and going up to 24 and a half and 25. Second, we're allowing price to come down into a level that's more attractive, like 23.50 or 22 in this case. So if we cut through half of these levels, I'd be really happy with that. There's the Fibonacci retracements, which we mentioned from the last video. We will revisit them again and just show how precise it is. But nothing has changed technically when it comes to some of the levels still holding. That's unless they become weak at some point. So we have the 4-hour chart here, which shows a really interesting detail about how price was able to rally into just the edge of the ceiling here, get knocked down, and come back up into the ceiling again at a lower level and get knocked down once again. So we're charging towards 24. And I think that what will really accelerate that drop is cutting through the moving average. We can also see here from this time frame that 2150 and 22 are very crucial to holding on to the rally entry point, right? So with this origin of the rally, and more importantly, how we gauge the position or orientation of the rally as bullish or bearish on price's relationship with the moving average. So what do I mean by that specifically? Price is above the moving average, makes the backdrop green. Price cuts below the moving average, it makes it red. Then we have some indecision or just a big rush of enthusiasm. We saw this from a few days ago, right? It just rocketed higher, and then we grabbed all the pips out of that. And then we have really no white flashing candle to show that the uptrend has staying power on the 4-hour frame, but still, it's above the moving average, and for that reason, it's bullish. So I reckon that once we cut through this moving average once again, we'll have lower prices for sure. And then on the 1-hour, we can just see how they're articulating their sell orders. The buyers are really drying up, and we have more of an angular decline. So with this, we don't get red candles for too long, but we get very vicious ones. So for us to confirm that the rally has lost steam completely on the 1-hour, we would have to cut through 24 and possibly even go as low as 22 or 21 in a few hours. I'm talking about 3 or 4 hours, just based on past performance. And so the bottom line is that we look for the value and we look for the setups. Right now, it's just a very tired uptrend, the appearance of one anyway, and a chance to buy lower. On the more positive side, we have this bullish candle here, which led us into really the top end of the ceiling that I mentioned before. That's a low of 21 and a high of 25. Well, we just scraped at 25, and now it's backing off. In uptrends, one thing we can observe is that when the ceilings get higher and the floors get higher, those brackets will just get lifted. So we could be in store for a higher floor above 21. This has been your chart report on the basic attention token. This is Damien, over and out.